Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey, welcome back to the Invested Dads Podcast, the podcast where we take you on a journey to better your financial future. I am Austin Wilson, research analyst at Hicks & Zuercher Capital Management.
And I am Josh Robb, Director of Financial Planning at Hicks & Zuercher Capital Management.
True.
How can people help us grow this podcast?
Well, we would love it if you would subscribe if you're not subscribed already. That way you get a new episode every single Thursday directly to your device. We would also love it if you would leave us a review on Apple Podcasts, Spotify, Google Play.
Google Podcast.
Is that a thing?
That is the most used thing
on an Android device.
On my phone.
Yeah, there you go. So we would love it if you would subscribe. So Josh, what are we talking about today?
Today we're talking about this guy Warren and his buffet. And so Warren's
buffet,
guy. It's a smorgasbord of information.
Yeah, all you can eat.
Yes. So Warren Buffett, he is a investor, owns a company, and we're going to give you more details about that. But he, in our world, is considered to be one of the best traders in the world.
Best investors of all time.
And we'll talk about that and why people say that. But Austin, I know you are excited about this.
Yeah.
And so I want to have you kick it off with some highlights.
Some highlights. So there was a great Forbes article, which we'll link in the show notes, but some highlights that they had about Warren Buffett were that he was known as the Oracle of Omaha, really adding homage to his home in Omaha, Nebraska. Also known as one of the most successful investors of all time. He runs Berkshire Hathaway, very famous company, which owns more than 60 companies. So it's what's called a conglomerate. It owns a bunch of different companies and pieces in other companies. That company owns insurer Geico, battery maker Duracell, which, fun fact about Duracell has recently spent some big money to get into advertising in Formula One.
Interesting.
So they have started branding parts of the car of the Williams racing team, the British team. Like, it looks like a battery. It's got the little copper and the black. It looks pretty sweet.
Right.
And Dairy Queen. Dairy Queen's another one there. So I got to have your ice cream.
Yes.
He is the son of a U.S. congressman. He bought his first stock at age 11.
Wow.
And filed taxes first time at age 13.
Interesting.
He promised to donate over 99% of his wealth. So far, he's given more than $45 billion away, mostly to the Gates Foundation and his kids' foundations. Ironically, the Gates Foundation, their largest holding is
Berkshire
Hathaway stock.
He probably donated his stock as well.
Yeah, exactly. In 2010, he and Bill Gates, he's big buddies with Bill, launched the Giving Pledge, asking billionaires to commit to donating at least half their wealth to charitable causes. So those are some highlights, but there's a lot to talk about when you talk about Warren Buffett. He's very old. He was born in 1930, so Wikipedia is full of great information about Warren if you want more.
Great information.
Born in 1930 in Omaha, Nebraska. He's the second of 3 children and the only son of Layla and Congressman Howard Buffett. Not Buffet. Buffett. That's a joke. He began his education at Rose Hill Elementary School. In 1942, his father was elected to the first 4 terms in the United States Congress, and after moving with his family to Washington, D.C., Warren finished elementary school, attended Alice Steele Junior High School, and graduated from what was then Woodrow Wilson High School in 1947. So he graduated high school in 1947.
Wow.
Which makes sense because he was born in 1930.
Yeah.
He's no spring chicken, but he's still kicking.
Is.
So his senior year picture in the yearbook reads, Warren likes math, a future stockbroker.
There you go. Nailed it.
Nailed it. After finishing high school and finding success with his side entrepreneurial and investment ventures, which we'll talk about soon, Buffett actually wanted to skip college and go directly into business, but his dad said,
nope.
No, you're not going to do that. So Buffett displayed an interest in business and investing at a young age. He was inspired by a book he borrowed from the Omaha Public Library at age 7 called 1,000 Ways to Make $1,000, which $1,000 back then,
that's a lot of money.
That's a lot of money.
Yeah.
Much of Buffett's early childhood years were enlivened with entrepreneurial ventures. In one of his first business ventures, Buffett sold chewing gum,
there you go,
Coke bottles, and weekly magazines door to door. He worked for his grandfather's grocery store. While still in high school, he made money delivering newspapers, selling golf balls and stamps, and detailing cars, among other ways. On his first income tax return in 1944, Buffett took a $35 deduction for the use of his bicycle and watch on his paper route.
His watch?
Well, yeah, you got to keep time, I guess.
Yeah.
So that is so funny. In 1945, as a high school sophomore, Buffett and a friend spent $25, so 1945, $25, to purchase a used pinball machine. They then took that pinball machine and placed it at the local barbershop, and within months, they owned several machines in 3 different barbershops across Omaha, and they actually sold their business a year later for $1,200 to a
placing those in the barbershop helped them shave some money?
They shaved some money.
Yes.
Oh, Josh.
I was just wondering.
That's classic.
Yes.
Buffett's interest in the stock market and investing, it dated all the way back to his days in school, where he really spent in the customer's lounge of a regional stock brokerage near his father's own brokerage office. So he kind of got to hang out there sometimes. And on a trip to New York City, age 10, he made a point to visit the New York Stock Exchange. At 11, he bought 3 shares of Citi's Service Preferred. So he bought a preferred stock, I'm guessing, for himself, and 3 for his sister, Doris Buffett, who also became a philanthropist. At 15, he made more than $175 delivering Washington Post newspapers.
Ooh, there you go.
In high school, he invested in a business owned by his father and bought a 40-acre farm worked by a tenant farmer.
In high school?
Yeah, that's what it says. He bought the land when he was 14 years old with $1,200 of his savings. By the time he finished college, Buffett had accumulated $9,800 in savings, which is about $112,000 today.
Wow.
By the time he had finished college.
That guy's crazy.
That is crazy. In 1947, Buffett entered the Wharton School of the University of Pennsylvania.
Pretty well-renowned.
Pretty well-renowned, yeah, absolutely. He would have preferred to focus on his business ventures, but yeah, as we talked about earlier, his dad was like, nope, Warren, you got to go to college. So Warren studied there for 2 years. He joined the Alpha Sigma Phi fraternity. So if you're a member of that fraternity, you're probably going to claim Warren Buffett forever.
Sure.
Probably a good, wise choice to do that. He then transferred to the University of Nebraska at age 19, where he graduated with a Bachelor of Science in Business Administration.
There you go.
He was rejected by the Harvard Business School.
Whoopsies.
Afterwards, he enrolled in the Columbia Business School of Columbia University upon learning that Benjamin Graham taught there. So Benjamin
He was
Graham,
also well-known.
also a very
investor.
well-known, famous investor from even before Buffett's time.
Yes.
So he's like, if Buffett's what everyone looks at now, Benjamin Graham was right before Buffett, what everyone was talking about.
Buffett learned from Graham.
Exactly. So he earned a Master's of Science in Economics from Columbia in 1951, and after graduating, he attended the New York Institute of Finance.
There you go. So that's real-life stats.
It is.
Some facts. A little more fun, a little more kind of just random, but he still lives in Omaha, Nebraska. So
True.
Successful guy, still
He
stays
could buy whatever
same
he
spot. He
wants.
could be anywhere he wants, headquarters anywhere he wants, stays there. He's actually in the same home that he purchased in 1958, and he bought that for $31,500.
I bet it's not worth that now.
It's probably worth a little more as well. You mentioned he was rejected from Harvard Business School, which they probably kind of regret that looking back. I'm sure he probably could have been an alumni donor that maybe would have helped kick some money that way. I don't think they're hurting too bad.
Probably not.
Another fact, he gets McDonald's almost every morning for breakfast. Pretty much every day.
Yep.
And he oscillates between $2 and $3.17. Now, this was pre-inflation, so
Right.
it's probably gone up since then. But he orders one of 3 things depending on how he's feeling.
Yeah, I
and it
think he's
varies.
a big fan of not the
Sausage
McGriddle,
McMuffins?
the McMuffin. He's a
McMuffins,
McMuffin fan.
Mhm.
He also just loves Coca-Cola.
Oh, he drinks
Coke
5 or 6 a
every
day.
day.
Yep. He was once quoted as saying, he looked at the life expectancy tables, and 6-year-olds had the highest life expectancy. So he eats like a 6-year-old in order to try to capture their life expectancy.
That is
Loves
funny.
Oreos, loves Coke, like you mentioned. He also still continues to use coupons. So he's been known to use coupons at McDonald's and stuff when he goes there.
That is, hey,
Yes,
you don't
he
get
is
to
frugal.
be.
In fact, he at once had a license plate that said Thrifty. That was the name
Did
of
he?
his license plate.
He is famous for driving Cadillac.
He
And I
likes the
think that
Cadillac.
he's been driving Cadillacs since probably the beginning of his driving days, and he still drives Cadillacs
go.
to this day, but he does not always, drives used Cadillacs.
Yeah.
So I don't think he goes out and buys the brand new ones.
Likes
He
the-
drives them for years and
There you
years
go.
and years, and when he needs a new one, he gets a
He'll
new
get
one,
a new
but
one.
he drives them for a long time, and I'm sure at his age of 90 plus, he probably doesn't drive as much as he used to. All right, so back to the history of Warren Buffett. Exciting stuff. So Warren Buffett worked from 1951 to 1954 at Buffett Falk & Co., which is where he was investment salesman. From 1954 to 1956 at Graham Newman Corp. as a securities analyst. From 1956 to 1969 at Buffett Partnership Limited as a general partner. And from 1970 on as chairman and CEO of Berkshire Hathaway. So in 1951, to kind of fill in some of those gaps, Buffett discovered that Benjamin Graham, who we were just talking about, was on the board of Geico Insurance.
Oh, there you go.
Geico is not new.
No.
Before they started using the Gecko in marketing, Geico was an insurance company well before
It's
that.
been there, yes.
For a long, long
while.
time. So, funny story. So, yeah, taking a train to Washington, D.C. on a Saturday, he knocked on the door of Geico's headquarters until a janitor admitted him. He there met Lorimer Davidson, which was Geico's vice president, and the two discussed the insurance business for hours. Davidson would eventually become Buffett's lifelong friend and a lasting influence, and would later recall that he found Buffett to be an extraordinary man, and after only 15 minutes.
Nice.
Buffett wanted to work on Wall Street, but both his father and Ben Graham urged him not to. He offered to work for Graham for free, but Graham refused. Buffett returned to Omaha and worked as a stockbroker while taking a Dale Carnegie public speaking course.
There you go.
Using what he learned, he felt confident enough to teach an investment principles night class at the University of Nebraska,
Imagine
Omaha.
being someone who attended that. And
Someone
said,
did. Yeah.
Warren Buffett was my professor.
I know.
Man.
It actually notes also that the average age of his students was more than twice his own.
Yes.
During his time, he also purchased a Sinclair gas station as a side investment, and not that it happened very often in Warren Buffett's career, but it did occasionally. That business venture was unsuccessful.
Did not work out.
In 1952, Buffett married Susan Thompson at Dundee Presbyterian Church.
There you go.
The next year, they had their first child, Susan Alice. In 1954, Buffett accepted a job at Benjamin Graham's partnership, so he did get in eventually.
There he is, finally.
His starting salary was $12,000 a year, which is about $121,000
Pretty good
today.
starting salary.
Exactly. There he worked closely with Walter Schloss. Graham was a tough boss. He was adamant that stocks provide a wide margin of safety after weighing the trade-off between their price and their intrinsic value. It's key thinking of how Buffett has invested throughout the years. That same year, the Buffetts had their second child, Howard Graham. In 1956, Benjamin Graham retired and closed his partnership. At this time, Buffett's personal savings were over $174,000, which is about $1.73 million today, and he started Buffett Partnership Limited. So, he's getting his feet rolling here. In 1957, Buffett operated 3 partnerships. He purchased a 5-bedroom stucco house in Omaha, where he still lives, for $31,500, like we talked about. In 1958, their third child, Peter Andrew, was born. In that year, Buffett operated 5 partnerships. In 1959, the company grew to 6 partnerships, and Buffett met future partner Charlie Munger, of whom he still works closely with to this day. By 1960, Buffett operated 7 partnerships. He asked one of his partners, a doctor, to find 10 other doctors willing to invest $10,000 each in his partnership. Eventually, 11 agreed, and Buffett pooled their money with a mere $100 of original investment of his own, famous for using other people's money to make money. In 1961, Buffett revealed that 35% of the partnership's assets were invested in the Sanborn Map Company. He explained that Sanborn stock sold for only $45 a share in 1958, but the company's investment portfolio was worth $65 a share. This actually meant that Sanborn's map business was being valued at minus $20. Buffett eventually purchased 23% of the company's outstanding shares as an activist investor, which then allowed him to have a board seat for himself on the board of directors, and he allied with other dissatisfied shareholders to control 44% of the shares. To avoid a proxy fight, which is really just where you actually have to get voting from the shareholders, the board offered to repurchase shares at fair value, paying with a portion of its investment portfolio. 77% of the outstanding shares were turned in, and Buffett had obtained a 50% return on investment in just 2 years. That's well above, normal returns, right? So, moving on in the 60s, in 1962, Buffett became a millionaire.
Oh, there you go.
That's the M. He's a millionaire as of 1962, and this was because of his partnerships, which in January had an excess of $7 million, of which $1 million belonged to him.
There you go. Look at that.
Yeah. He merged these partnerships into one. Buffett invested in and eventually took control of a textile manufacturing firm, which was known as
Berkshire Hathaway.
Berkshire Hathaway. So he began buying shares in Berkshire from Seabury Stanton, which was the owner, whom he later fired, actually.
Yeah. That happens.
Buffett's partnerships began purchasing shares at $7.60 per share. In 1965, when Buffett's partnerships began purchasing Berkshire aggressively, they paid $14.86 per share, while the company had working capital of $19 per share. So again, significant discount to what they were actually worth. This did not include the value of the fixed assets, which were factory and equipment of the textile manufacturing, which was actually making it worth even more. Buffett took control of Berkshire Hathaway at a board meeting and named a new president, Ken Chase, to run the company. In 1966, Buffett closed the partnership to new money. He later claimed that the textile business had been his worst trade. He then moved the business into the insurance sector, and in 1985, the last of the mills that had been the core business of Berkshire was sold. So,
There you go.
that's a crazy story of how Berkshire kind of came to be.
When, every time I hear Berkshire Hathaway, I do not think textile or anything besides insurance, because that is their primary source of business. I mean, they're a conglomerate, like you said, but their bread and butter is insurance. And that's all I think of.
Yeah.
So it's crazy when you hear that history.
So Buffett wrote letters to his shareholders. He still does to this day. But
Which are well read even by non-shareholders.
Oh, yeah. In his second letter, Buffett announced his first investment into a private business, which was Hochschild, Cohn and Company, which was a privately owned Baltimore department store. In 1967, this is key, Berkshire paid out its first and only dividend of 10 cents. That's actually to this day. They don't pay a dividend.
Nope.
In 1969, Buffett liquidated the partnership and transferred their assets to his partners, including the shares of Berkshire Hathaway. In 1970, Buffett began writing his now famous annual letters to shareholders. So, and there were periodic ones before that, but in 1970 they became annual. He lived solely on his salary of $50,000 per year and his outside investment income at that point. In 1973, Berkshire began to acquire stock in the Washington Post Company. Sound familiar? The newspaper.
Washington Post.
Yeah. Buffett became close friends with Katharine Graham, who controlled the company's flagship newspaper, and joined its board. In 1974, the SEC opened a formal investigation into Buffett and Berkshire's acquisition of Wesco Financial due to a possible conflict of interest. However, no charges were officially brought to him. In 1977, Berkshire indirectly purchased the Buffalo Evening News for $32.5 million. Antitrust started being investigated by its rival, the Buffalo Courier Express. Both papers lost money until the Courier Express folded in 1982, at which the Buffalo Evening News probably took over, making good money.
There you go.
In 1979, Berkshire began to acquire stock in ABC, Capital Cities. They announced a $3.5 billion purchase of ABC on March 18, 1985, surprising the media industry, and ABC was 4 times bigger than Capital Cities at the time. Buffett helped finance the deal in return for a 25% stake in the combined company. 25% is a lot. The newly emerged company known as Capital Cities ABC, or Cap Cities ABC, was forced to sell some stations due to U.S. Federal Communications Commission ownership rules, FCC. 2 companies also own several radio stations in some markets. In 1987, Berkshire Hathaway purchased a 12% stake in Salomon, Inc., making it the largest shareholder and Buffett a director. In 1990, there was a scandal involving the former CEO of Salomon Brothers that surfaced, which made this whole thing seem a little bit more interesting. There was a rogue trader named Paul Mosier. He was submitting bids in excess of what was allowed by Treasury rules, and that caused the scandal. Don't do that. Don't do things that are in excess of Treasury rules. Yeah. Just very interesting, kind of the way we got to be where we are today. Generally speaking, Buffett has done very well at avoiding scandals and issues and things like that. But as is the thing when you're dealing with people, people are messy. And he's found that out through a couple of his deals.
Yes.
In 1988, Buffett began buying the Coca-Cola Company stock, eventually purchasing up to 7% of the company for $1 billion. It would
Does he
turn
get
out,
a discount then on all the Coke?
Yeah, just free Coke. It would turn out to be one of Berkshire's most lucrative investments and one which he still holds. Flash forward again to 1990, Buffett became a billionaire in 1990.
With the B.
And that was when his stock closed at $7,175 a share.
Let's go back. He became a millionaire.
Yes.
Millionaire with an M.
1962.
1962. And then he became a billionaire with a B in 1990. Okay.
28 years.
28 years to grow, compound
$1,000
million
times.
to $1 billion.
1,000-time return in 28 years.
All right. That's pretty good.
And that, it's that sort of long-term performance, and he loves the power of compounding. It's compounding, he would say, that has led his superior returns over time. Like, the market did not do that kind of performance over that time, but his investments did, which was crazy. A couple of interesting points. Buffett has some interesting thoughts on gold. So gold, we've talked about it before. We have a whole episode of it. We'll link in the show notes, but he's not a fan of investing in gold. He's been critical of it as an investment. His critique is primarily based on the fact that it really doesn't do anything. And it doesn't.
No.
It does not produce, income or dividends or interest or anything. So in 1998, he addressed Harvard, which he didn't get into, but he addressed them anyway. And he said, it gets dug out of the ground in Africa or someplace. Then we melt it down, dig another hole, bury it again, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head.
He is not a fan.
In 1977, he talked in a discussion about stocks, gold, farmland, inflation. He said stocks are probably the best of all the poor alternatives in an area of inflation. At least they are if you buy them in appropriate prices. And we are in an era of inflation now, and he would be saying this is really the time to be backing up the truck on stocks, not necessarily selling stocks.
Yeah.
A couple other quotes that we're going to talk about later about times like this.
And he has a similar stance, at least now, on cryptocurrencies.
He's not a fan of them.
Because they're not a company that provides value or has some sort of production associated with them.
Yes.
Yes. All right, now it's time for a quick break.
Oh,
and
yeah.
Dad joke of the week.
Buffett joke of the week.
Well, it's a dad joke.
Okay.
But it does go along because do you know I was actually named after Warren Buffett?
No.
Yeah. My name is Josh Robb, but my name was given to me after Warren Buffett's. So I was named after Warren Buffett. There's your dad joke.
Okay, I like
Warren
it.
Buffett.
I like it. All right. So that was a long history of Warren Buffett, but he's had a fascinating career in life, right?
Yep.
I think it would be great to leave our listeners with 25
That's a lot.
amazing Warren Buffett quotes, and this was
That'd
from
be great.
a Yahoo Finance article, which we'll also link in the show notes. Quote number 1. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Ooh, that's interesting.
Buy good companies. And you know one of Buffett's, or it is his largest holding right now,
Apple.
he thinks it's a wonderful
He
company.
likes that company.
And he keeps buying it.
Yeah. Well, that comes to the idea that, there's what's called value investing where you look for something that's undervalued and you buy them hoping that it'll grow in value. Although he's considered to be a value investor, his process isn't you always buy the cheapest thing, but you find
best.
a company you really like and you have to buy it at a good price.
Absolutely.
Yes.
Speaking of price is what you pay. Value is what you get. That's quote number 2. So
Yes.
that's a very good differentiation between the two because they are not the same.
Yes.
Number 3, it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. And I think
That is very true.
We can all live by that.
That's a good life lesson.
Number 4, a simple rule dictates my buying. Be fearful when others are greedy and be greedy when others are fearful. And that is something he said in October of 2008.
Oh, wow.
And so
And he did very well.
he did very well buying things when they were cheap coming out of that crisis.
Yep.
He's also notably been buying this year as the market's been down pretty sharply.
And he was getting a lot of pushback for how much cash he was holding in recent years when
He
the
thought
market was
things were
doing really
overvalued.
well. And so I think he holds true to that.
So that's something that is just a long-term thinking of when markets are falling apart and people are really not optimistic about it, that's probably the time to be backing up the truck, right? Number 5. The important thing is to know what you know and know what you do not know.
Yes.
It's okay to admit where you don't know something.
Yes.
He's okay with that. Number 6, you cannot make a good deal with a bad person. And this goes back to buying good companies, not just cheap companies. He buys businesses. Typically, he buys a lot of whole businesses. He buys businesses with management he can trust. Management is key, and trust in the management is key there. Number 7, just buy something for less than it's worth.
That's like the simple investing
That's really simple.
philosophy. If
you think it's worth $10, try and buy it at 8 or less. So that's a very good point from Warren Buffett there. Number 8, whether we're talking about socks or stocks, I like buying quality merchandise when it's marked down.
There you go.
Goes back to his couponing.
I like things on sale.
I do. Nothing wrong with that. Number 9, uncertainty actually is the friend of the buyer of long-term values. What does he mean by that?
The uncertainty causes disruptions in the market,
Yeah.
which gives you the opportunity to buy at a price below what it's worth.
Absolutely.
Yes.
Hopefully, maybe like what we're seeing now in the markets as they're not doing so hot. Number 10, as in the case with marriage, business acquisitions often deliver surprise after I-dos.
There you go.
He's had his fair share of surprises with some of the businesses
Yes.
he's acquired over the years. Number 11, Wall Street makes its money on activity. You can make your money on inactivity.
Sometimes the best decision is no decision.
Don't do anything at all.
Yes.
And don't look at it. Just don't
Yes.
do anything.
Mm-hmm.
Stick to the plan. Number 12, every decade or so, dark clouds will fill the economic skies, and they will briefly rain gold.
Give you opportunity.
Exactly. So when the economic skies are dark, that could be a great opportunity to make some good long-term decisions. Number 13, don't pass up something that's attractive today because you think you'll find something better tomorrow. If you see something attractive, buy it.
Yeah. That kind of goes to, I think it was Ben Franklin that said, don't put off tomorrow what you can do today. The idea is just, there's always something, you can always have an excuse to prolong or push something off. But if there's an opportunity, take advantage of it.
Yeah. Number 14, the sillier the market's behavior, the greater the opportunity for the business-like investor. So markets are often irrational, and markets are almost always overpricing things down and or up.
Mm-hmm.
Things are either too bearish than what's reality, or things are too bullish for what's reality, and that's why there's corrections. So he's saying, when the markets are silly like that, that is a great opportunity for a business-like investor. Number 15, you only learn who has been swimming naked when the tide goes out. So if you have all your eggs in one basket and the market falls apart, that's when you find out who had all their eggs in one basket.
Or a company who is artificially adjusting their returns or using accounting gimmicks to make them look more profitable. Well, when there's a slowdown, you'll see who actually is running the business properly.
Number 16, the best way to think about investments is to be in a room with no one else and to just think. If that doesn't work, nothing else is going to work. So he spends a lot of time thinking.
Yes. In fact, I saw that he does not have a computer on his desk at work.
Can't think with a computer, obviously.
According to the article, he had one email in his life he's ever sent.
Whoa. Who was
and
on
it
the
was to
receiving end
Microsoft.
Of that? Was it? That's funny.
But I'm sure he has assistants or whoever that send stuff. But he likes to think and likes to have time, so he does not have a computer on his desk, so he can read, and that's what he loves doing.
Yeah. Number 17, what we do is not beyond anyone else's competence. I feel the same way about managing that I do about investing. It's just not necessary to do extraordinary things to get extraordinary results. And that just goes back to sticking to a plan, keeping it simple, buying things when they're cheap.
Yes.
That's kind of his very simple mantra over time. All right, Josh.
Yes.
Number 18. Warren Buffett quote. Rule number 1 is never lose money. Rule number 2 is never forget rule number 1.
That's true.
So that's a pretty good one to keep in mind.
Right. And number 19 is he's a very rich person, so should leave their kids with enough money to do anything, but not enough to do nothing.
See, and that goes back to his point of donating 99% of his wealth. Well, he's a bajillionaire.
Yes.
And so therefore, his kids will have some money coming, but they'll still have to do something.
Enough to do anything they want,
but not
enough
to do
so they
nothing.
don't have to do anything.
Exactly.
There you go.
All right, number 20. When seeking directors, CEOs don't look for pit bulls. It's the Cocker Spaniel that gets taken home. That's an interesting way to look at.
You know, Cocker Spaniels, though, they're notorious for peeing when they get excited. So I don't know how that plays into anything. I just know that about that dog.
I mean, we have a Spaniel breed, and all I can say is those ears are a breeding ground for ear infections.
Oh, yeah. Any dog with that.
Floppy ears.
They cover and...
It's not good. It's not good. All right. Number 21. Our experience with newly minted MBAs has not been that great. It's difficult to teach a new dog old tricks.
It's kind of the reverse of what you always
funny,
say.
Right?
That's funny.
Number 22. It's always been a mistake to bet against America since 1776.
Yes.
That's actually a really good point.
I want that quote on a shirt.
He said that in 2011. Mm-hmm. Number 23, I have every possession I want. I have a lot of friends who have a lot more possessions, but in some cases, I feel the possession possesses them rather than the other way around.
There you go.
Don't be materialistic is what he's saying there. Number 24, my wealth has come from a combination of living in America, some lucky genes, and compound interest.
There you go. That's all you need, I guess.
That's pretty good. And number 25, your best investment is yourself. There is nothing that compares to it.
There it is.
So, Josh, that is Warren Buffett in a nutshell. Some words of wisdom to live by. Yes. What can listeners do?
Yes, make sure, if you know somebody who likes Warren Buffett, share this episode with them so
like
they can
if they're
learn
hungry
a little more about
a buffet.
That's right. And if you have any thoughts, suggestions, questions, or anything along that way, shoot us an email at hello@theinvesteddads.com. By the way, make sure everybody is playing our Invested Dads stock draft.
Second half stock draft.
That's right. So check back. We have an episode all on that. Also on our social media. Tells you how to get involved. It's not too late to sign up and get invested.
Absolutely. Until next Thursday, have a great week.
All right. Bye.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review. Click subscribe and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.